Hello and welcome to this very special edition of KYC, Know Your Company. Today we're going to break down, analyze Bajaj Auto. We're going to start off with obviously trying to understand exactly what Bajaj Auto does. I'm going to start off by telling you all that it's of course the flagship company of the Bajaj Group, manufactures two-wheelers, three-wheelers, and it does both passenger vehicles within that two-wheeler pack to consumers, as well as in the CV space, it does three-wheelers as well. So, so wide variety in terms of product suite. You're looking at some of the brands that it operates. KTM through its ownership of the KTM brand, through the Austrian brand, which is KTM. But outside of that, pretty much all brands are in-house and developed in-house. Chetak, of course, EV being one of the newest brands that they've launched within the EV space, and quickly gaining market share, that one. This is how the overall sales have stacked up for FY24 versus FY25 full year. Of course, now we have full year numbers in terms of sales. Looking at 7% overall, but look at domestic, it's just 3%. And that's where some of the softness in terms of the numbers have crept in terms of the company as a whole. The two-wheeler export market on a low base has done around 13 to 14%, which is okay. It's a low base, and therefore you would expect something better from it. But at least FY25 numbers, okay. This is the place where it's been slightly soft, the operating metrics, where Bajaj Auto is concerned. But I want to try and highlight some of the verticals and the pillars of Bajaj Auto. One, it has a 100 to 110 cc segment where it runs the Bajaj CT and the Platina brands. 125 cc and above, it has Pulsar, KTM, Avenger, among others. And then it has Pro Biking as well as Triumph. So those are some of the other brands that it runs, Bajaj Auto. It also does three-wheelers where it has a 75% plus market share. Exports as well is fairly large for it. It does exports in 80 countries worldwide. Mexico, Peru, Ethiopia, Turkey, Saudi Arabia are just some of them. You also have a Bangladesh and a Myanmar and an Afghanistan as part of that pack. It's also ventured into Latin America. So Africa, Latin America now being the big focus areas. And we will also have a conversation with the management, Mr. Rakesh Sharma, Executive Director, to talk to us about what the outlook is like going forward with regard to a Bajaj Auto. But let's quickly look at what are the metrics that we'll be tracking for this particular company. We're going to start off, of course, with the four basic ones: income statement, balance sheet, cash flows, shareholding, and return ratios. Those are the five basic ones. Thereafter, we look at street cred, street coverage, and we'll also look at the valuation picture. And joining me today to break this one down is Puneet Javeri. Welcome, Puneet. Let me allow you to start off with the income statement. This is home turf for you.
Yeah, well, definitely, and it's a very strong income statement that the company has over the last 5 years. We've definitely seen post-COVID the strong recovery in financials after that blip in 2020. So, revenues of FY24 was about 44,000 crores for the company. It's grown at a strong CAGR of 17% over the last 3 years. EBITDA has also kept up pace, much higher, 21% growth for the company, while on a profitability basis, it's more than 7,400 crores of profits generated in the last year. That momentum has continued in this particular year as well, and profits have grown at a CAGR of about 18%, Harsh, overall. So definitely it's a flagship brand, much known about the company, but definitely a very big financial gain for the company, essentially very positive on that aspect.
Yeah, they've done well on profitability as well, right, Puneet? Clearly a thumbs up, 2,000 crore plus of PAT. They also do 20% plus of margins, which is very, very healthy for an auto two-wheeler and three-wheeler maker. And they've also, to some extent signaled the larger focus on profitability versus going only for top line and volume growths. That's basically what they've signaled. And therefore, compared to peers, this one is doing something slightly more differentiated in that sense. So something to be kept in mind. Let's quickly look at the balance sheet as well. No concerns here whatsoever, frankly. It's a net debt-free company. It's got nearly 2 lakh crore plus of market capitalization. and thereafter being net debt free and generating strong free cash flows means that debt is not a concern, at least at this point. And therefore, clearly a thumbs up on this count, no concerns. Puneet, cash flow.
Well, cash flows also kept up pace very strongly. The cash flow from operations for FY24 was roughly at 6,500 odd crores. And when you compare it over the last 3 years as well, it's been very well at 28% CAGR. This is despite, the new EV brand of Chetak launched in the two-wheelers. They've also launched the electric three-wheelers as well. And while on an EBITDA margin basis, it's not helped growth because the two-wheeler business has been growing, but they've maintained the EBITDA margin at 20%, and that has flown to the cash flow as well. The net cash flow number as a whole is coming at 319 odd crores. It's 11% CAGR, Harsh, on that aspect. But overall, both income statement and balance sheet doing very well, and that's flown into the cash of the company as well.
Absolutely. I'll quickly take you through shareholding as well. Thereafter, we'll also look at return ratios. But in terms of shareholding, you're looking at promoter holding at 55% currently cumulative. Mind you, there's been a buyback as well, and therefore actually promoter holding has only gotten better. And that's one key positive. Bajaj Holding is the key promoter, of course, promoter entity. 34% is what Bajaj Holding holds. It's been this way for the last at least 7 to 8 years, and therefore what you're seeing is good, strong promoter ownership continuing, and intent of the promoter as well to continue to hold. You have then Jamnalal Sons Private Limited, which is one of the other entities, which holds around 9.3%, and a Maharashtra Scooters, which is also a listed entity, holds around 2.5% of the company at this point. And then there are, of course, smaller shareholders within the promoter group. But overall, it's a very, very strong promoter holding, and it's a well-held, closely held company in that sense, of course, of the Bajaj Group. So unlikely that this will change significantly. A clear thumbs up on this one. Return ratios, Puneet.
Definitely. We've seen very strong return ratios for the company. Return on equity more than 30% for the company in FY24. And, that's reflective of the strong profitability that's flown into return ratios as well. Return on capital employed, and that's very key for this company, more than 28.8%, and that's actually improved to 30% in the 9 months of FY25, Harsh. So no complaints here as well. It's a big thumbs up on this aspect as well.
Okay. Let's go across to street coverage then, Puneet. So that's how it really stacks up in terms of street coverage. Is fairly healthy coverage in that sense. But just in terms of upside, there are analysts on the street, Puneet, which believe that a TVS, an Eicher, and other auto stocks look far more attractive than this one. And yes, therefore we call this a neutral, even though it's very, very well covered. It being a Nifty 50 stock, in that sense, it's very, very well covered. But nonetheless, we'll call it a neutral, 66% buys, and of course the upside being 20%ish. But there are much better opportunities out there as per what analysts seem to suggest in this segment. But you want to take us through street cred?
Yeah, and definitely, just one comment, because Eicher as well as TVS, they both have, so TVS has a scooter portfolio, and that segment has been growing very well.
Yes.
And I think hence it is much overvalued, and we'll get to valuation there. And Eicher specifically, it's tapped the export market for the first time this year. They've crossed 10 lakh, and hence I think the growth aspect there is much higher. Hence, your specific point of 66% buy calls, and that's why still a neutral. The street coverage, though, we've seen a strong return potential, 277% has grown in the last 5 years specifically. Compared to the Nifty, it's at 180%, and dividend yield has also been 1%. But I think we were speaking about this before as well, because if you remove the March first part of the March, if you take it from March 1st, I think the return hasn't been as high as expected.
Yeah, I mean, when you pull it back a couple of months, because of course 5 years exactly will mean the lowest of lows of COVID.
Yes.
Therefore, is that fair to look at returns from the lowest of lows of COVID? Maybe not.
Yeah.
But if we were to look at it, say from 1st of February, the returns it's been a 2.5 bagger in the last 5 years, which is fairly satisfactory. But what we've seen is that it's underperformed the index marginally. And therefore, what you would therefore believe is that maybe a better performance. And the second piece, Puneet, which you kind of highlighted to me, is that some of the other players, like a TVS, have done phenomenally well in the same period of time.
Yeah, I think TVS has grown 8x in terms of share price performance in the last 8 years, and right now around 2400 is where TVS is. That's fallen from 3200, so it was much higher there. Similar with Eicher, if you just count on this metric, it's around 320%, so 3.2x bagger in that aspect. So,
but even this one's fallen nearly 30%.
Nearly 30%,
right? So,
yes, definitely. And
so that is to match
TVS, yes. So, but on this particular metric, we've seen the other two Eicher as well as something. And while they have outperformed Hero MotoCorp definitely in terms of growth and share price performance, I think that is one key thing to highlight as well.
Fair point. And what about valuations, Puneet? You're the best to drive that.
Well, valuations was tricky to say the least, Harsh, essentially for this in the two-wheeler space, because we've seen TVS being a key outperformer with 37x of FY26 price to earnings.
And Puneet, sorry, but each of these cater to a very different market. Each of them have very different priorities in terms of how management looks at the market as well. So sorry, yes, please go ahead.
Definitely, because for Eicher specifically, we've seen the export market growing very well in this year. And it's 350cc and above, so it's catering to the premium market, and growth has been there in this year and hence visibly there. For Hero MotoCorp, largely caters with the 100cc segment of the company. The growth has been largely absent, and now there are reports also that there is a lot of discounting happening, so might affect margins, and that's why it's trading at roughly half the, like more than 150% below something like TVS. And TVS is a complete product portfolio, multiple brands. They have 3 separate scooter brands, unlike Bajaj Auto, which has the Chetak already. But with Jupiter, with NTORQ, that market is growing very rapidly. Apart from what they have in Apache in the motorcycle segment, and now they've added Norton as well in the ultra premium segment. So I think that's where the valuation comfort is there specifically for TVS. When you look at Bajaj, it has fallen from its, we've seen the 30% correction, and hence it's become more favorable. And now the Chetak brand has been doing very well in the EV segment, sales of about 2.3 lakhs. But we've given it a neutral basis on the higher growth prospects of TVS as well as Eicher Motors.
Right. If I can just ask you, and this is completely off the bat, FY27, would you have visibility on how these P ratios move, especially for the first two?
I think currently most analysts are penciling in, and are waiting for the management commentary in Q4, because the domestic market has fallen for 6 consecutive months for for Bajaj Auto, and I think that's why the comparison is not available for FY27 specifically. But definitely, I think in that aspect as well, Bajaj might offer a very interesting opportunity going forward, because the company has a lot of cash. We've spoken about that. So I think eventually, once there's visibility on growth over the next year or so in terms of sales, I think those valuations become more attractive for Bajaj Auto.
And we've asked the management exactly that. So maybe we'll wait for that. But let's quickly look at how the rating parameters stack up in that sense. There you go. So income statement, balance sheet, cash flow, shareholding is a clean thumbs up on all 4. Also, in terms of street coverage, okay, a neutral there. Street cred, valuation, a neutral, but return ratios, again, very, very healthy. Anything between 28 and 30%. That's how the KYC rating stacks up for a Bajaj Auto. Mind you, we do factor in that this is a Nifty 50 company. And therefore, we factor that into the ratings that we give. And therefore, you might see that compared to a benchmark, you will see a slight bit of more rigor with regard to how we give a rating on a Nifty 50 stock. You would have higher expectations from it as well. But let's look at SWOT, Puneet. The strengths being, there's very strong brand visibility. Chetak has been a brand for Bajaj Auto since the time me and you were born, and continues to be a very strong brand. So and Bajaj Auto therefore has had a very strong brand. I remember when I was a kid, Hamara Bajaj was the big ad, and that continues to be the case. But what they've done, and what really stands out for me here, is that they've been able to hold on to margins. A 20% margin for an auto company, which is also doing EV. Is commendable in that sense. And we've asked him the outlook with regard to that as well. So listen in. But in terms of weakness, two-wheeler market is seeing a slowdown. They're letting growth go. We spoke about the operational metrics. We gave that one a thumbs down. Remember, even though that's not part of the metrics in the KYC rating, but we did give it a thumbs down. And there's also slowdown in the export market. It's starting to pick up, But what's the visibility like for FY26 is something which will hold the key. That's currently the weakness. But what are the opportunities and threats, Puneet?
Well, definitely, the new EV segment, the two-wheeler Chetak brand has been doing very well. It will look to build on to that growth, and we've spoken to the management about the growth aspect of the EV segment. They've also added the three-wheeler EV. Now they've relaunched a brand called GoGo, which will host essentially the three-wheeler business of the commercial vehicle side. That is a very interesting opportunity, and valuation versus peers we discussed in detail. Currently, there's less visibility on the growth aspect of the domestic two-wheeler business. I think the export growth was absent this year, and hence we've seen that correction in the stock price as well. But overall, for the next year, they will have Africa come back, which is a big export market. They've added Latin America, Brazil capacity has been increased now. So overall, it'll be very interesting to see in Q4 the company's commentary on growth for the next year.
Puneet, let me pause you there. So after this, once we're done with this, I want to also look at the graphic of the March numbers and probably try and break that down before we go across and speak on the interview, because that's what you're talking about. Sorry, please go ahead.
No, definitely. And that's the key aspect, because currently they had penciled in 6 to 8% growth for this year. It's coming at 7%. So definitely meeting guidance, but it's still slower than something what TVS has done. And the threat is, of course, the slower two-wheeler growth. We've spoken about that as well with the management in terms of how next year is shaping up. And export market, that is currently, we've mentioned that as an opportunity as well. But we've seen increased competition from the likes of TVS. TVS now exports roughly 1 lakh units a month in terms of exports. And that's very close to what Bajaj does. Bajaj is at 140, 150,000. And that it doesn't take too much time for the brand like TVS to increase that aspect as well. So definitely could be a threat, but the opportunity as well as the strength of the brand is something to talk about here.
We spoke with Bajaj Auto's Executive Director, Rakesh Sharma, I beg your pardon. Here's what he had to say on the potential challenges for the company going forward. Listen in to a slice of that conversation.
Well, yes, over the last 5-6 months, and if you see, in fact, the entire year, we've sort of come out flattish when you look at volumetric growth. Our approach has constantly been in the market to optimize the top line, bottom line, and our. So therefore, you will see that this year we have achieved a milestone of 50,000 crores at an overall level. And at least in the first 3 quarters, as you know, our EBITDA margins were 20% plus. The final quarter, the financial results are still in the making and will be declared very soon. So that sort of indicates to you that it's not a one-sided approach which Bajaj Auto takes. We have to constantly look at optimizing the bottom line and the top line, as I said. And there have been periods of high demand, but there have been categories where it's been like, almost a red ocean kind of a situation over there, and we have not participated. So yes, in terms of being flattish, it's absolutely correct. In the domestic motorcycles, we have been a little bit flattish, but that's the outcome of balancing the top line and the bottom line.
Fair point, Mr. Sharma, because while I look at the last 6 quarters, your standalone EBITDA margins have been over 20%, so that's commendable. The only aspect for an investor, of course, you mentioned 6 to 8% growth at the start of the year, and you've achieved that as well because of a stronger export market growth, a revival in second half of last year. But how should investors look at your share of domestic market growth? Because that's been, as you rightly mentioned, it's been a negative for the last 6 months or so. So even the 125cc segment and above, because I think your 100cc segment is 8 to 9% of sales. So the rest 90% is also not growing in the domestic market. So I just want to understand as a company and as an approach, what is, if you can guide us also anything to watch out for FY26 also, do you see the growth being in that 6 to 8% range, or do you see it at the lower end of that range as well?
Well, the 6 to 8%, which I mentioned earlier, and which I would say around 6% is what we would take the industry to be growing at. And we believe that we have, at least over the last 6 to 9 months, put in place a portfolio which should deliver us in the coming months, in the coming year, and a performance which will be higher than that of the industry. FY26, FY25 was also a period where the EV business was scaling up. And towards the end of FY25 is when we achieved, we got rid of the negative margins which we were getting in the EV business. And that then allows us a greater degree of freedom to actually balance out growth and profitability. With the substantial EV portfolio being now in the green zone, 25% of our domestic revenues come from the EV vehicle sales, and all that is now in green zone, and that gives us a certain flexibility. So therefore, we feel that given the kind of product portfolio which we have put in, whether it is a CNG-based bike or it is the sub-segmented Pulsar variants targeted at sub-segments, almost 8 or 9 of them over the last 6 months, they should be able to drive growth. And of course, there are more new products in the pipeline in the coming months.
Point taken, Mr. Sharma. Harsh also joining in. Want to quickly check with regard to where the margin trajectory goes with regard to EV. You mentioned that it's now turned green in terms of EBITDA positive. Talk to us about how quickly does it go and scale the 20% number, because that's the number you're looking at an overall level.
Well, that's quite some time. If you understand the cost architecture and the dynamics, sure, the EV, I'm sure you will understand, yes, that for a 20% EBITDA at the EV is
but sir, that journey, how does it go? So talk to us about FY26. Will it continue to go up in this year as well as in the next year? Is that how you see it?
You see, these things are outcomes of greater growth forces. If I cannot sort of bet on it going. Of course, our endeavor is we were in the negative territory. We have now come into the green area, and we will continuously try to increase profitability over there. Like I mentioned earlier, we are optimizing top line, bottom line, and competitive position. All that is being done in the context of a very volatile international environment. To just, give you a number and say that this is exactly what is going to happen is not, it's not correct on my part. I can alert you to the various forces and our intent, but to be definitive about it, I won't sort of go up to that thing. Our intent is, of course, to keep improving the profitability, maintain our leadership, and balance the top line and the bottom line.
Point taken. And sir, PAT positive on both of these individually as well as combined. Again, the outlook there also, my guess is that you'll be non-committal. You're more skewed towards, or rather you're more focused on growth. Is that the right way to think of it?
If I've understood your question correctly, I'm saying that we are balancing growth and profitability with competitive position, and we don't calculate PAT at a business unit level.
So a quick question with regard to export. You've had a soft month in the month of March. FY26, does growth come back significantly? Of course, FY25 also you've grown decently, let me give you that. But so overall, FY26, what's the growth outlook like? Because each geography has its own set of issues.
Yeah, you're right. And, growth, the structure of growth, whether it is domestic or international, it's such that it is not linear or secular. It is not a straight line. It's more like a snake in the tunnel. We have to be, some quarters will be high double digit and some quarters will be, low single digits. That's just the nature of the markets right now. That's the nature of the construct of it. We have grown by 13-14%. And I would say that unless there is a major disruption, and always we have to put out that caveat when it comes to international markets, we should be clocking a similar kind of a growth rate in FY26.
Mr. Sharma, I just want to talk about the EV segment, because you had a very strong year in terms of the two-wheeler, and that's been highest compared to all your peers. And you are about at 230,000 units sold in FY25. For next year, what is the growth outlook? Because now you have a sizable base as well. I think you're number 3 in terms of overall sales for this year. In FY26, should we expect firstly on in terms of performance, any kind of growth, while if you can give anything quantification in that aspect, and on EV profitability, two electric three-wheelers were already profitable a couple of quarters ago on EBITDA. The electric two-wheeler business is also EBITDA profitable. On PAT profitability of electric three-wheeler, can we expect that in FY26?
I just said that we don't calculate PAT at a business unit level. The PAT is done at a corporate level, which is a combination of all the 6 business units which we have. The growth prospects for electric vehicles are promising. The industry is growing at about now 20% or so. The subsidies, as you know, have been halved in two-wheelers. We have to see what the impact is, but we think that it will certainly be still at a 15 to 20% growth. Q4, Chetak became number 1, and therefore we've got the momentum. We've launched a new platform, which is our 35 series. A few more products are in the anvil. The bottom line has turned positive. So things have lined up very well. New products, positive bottom line, industry growing at 15-20%, which is quite decent. So I think we should be able to outpace the industry again in this segment as well.
That's unfortunately all the time we have on this edition of KYC. From Puneet, myself, everyone who puts this show together, thanks so much for watching. Hope this was productive. And stay tuned to NDTV Profit. More action on the other side.